Hi, Jonathan York, Bay Financial Partners, looking at investment markets. A pretty major important speech by Fed Chair Powell at Jackson Hole appeared to imply that the Fed is looking at cutting interest rates as early as the meeting in September. Now, potentially that's a little bit of a gamble because certainly inflation is sort of, is pretty sticky out there. The latest PPI data was a plus 0.9 for the month. And the Fed's preferred sort of inflation gauge of a PCE is running at sort of high 2.7, 2.8. Now that's obviously well above the 2% target from the Fed. But obviously it has been a lot of pressure trying to be put on Fed Chair Powell from President Trump, claiming that he wants lower rates, they should be cutting rates, and he's too slow to cut interest rates. But with inflation running at those levels, it's very difficult for the Fed. But then obviously after the weaker jobs data, the US economy does appear to be struggling a little bit. But the irony of there is that Trump disagrees with that weak employment data, and if the figures were as he believes they are, then there is no reason for the Fed to cut interest rates. But the market certainly took it as a pretty clear sign that the Fed is looking to cut rates, and really had a pretty strong rally Saturday morning New Zealand time. Although the Fed did warn that Trump's tariff policies and his sort of potential economic policies out there really are harming global trade and also potentially harming the US economy. And indeed, one of the major US investment banks came out with a sort of piece that suggested that US consumers within the next couple of months would be having to pay for around 67% of the tariffs that have been imposed by the Trump administration. Now again, Trump disagreed with that vehemently and said that the CEO of the investment bank should be fired and should fire the economist as well. But what is quite interesting that most economists do believe that the US consumer or US companies will be the people who are paying the taxes. It certainly won't be the exporters and the foreign countries. And then Trump has now increased the tariffs on steel to include a couple of hundred other sort of products as well, which is just more inflationary pressures for the US. Because his argument is that it should be made in the US, but the problem is that the US can't produce enough of the various raw materials, commodities, etc., to meet its demand. And that's why it has to import them. Now, on the back of Fed Chair Powell's speech, rates have fallen a bit in the US. That all-important 10-year is 426, the 2 years back to 370, and the 30-year is 488. So now the issue is that if the Fed doesn't cut now in September, it potentially loses a little bit of credibility. Although it will be interesting to see what the employment data is in early September. Especially as Trump now has his own person in there providing the data. So will we see a big revision to the previous months? After that near $250,000 fall. Now much hype was around the sort of Trump-Putin meeting in Alaska. Really very little came out of that. Because Putin is still bombing Ukraine on a daily basis. and indeed even hit a US company that is manufacturing stuff in Ukraine. And Trump's response was just, "Oh, I'm very disappointed in that." Now, oil has risen just a little bit on WTI. It's currently 63.70 and change. Further bad news in the UK for the Bank of England. Inflation rises to a 19-month high of 3.8%. Also, the borrowing costs as well for the UK. Rachel Reeves, the Chancellor, has done a little bit of pressure there because those borrowing costs are now at around 27-year highs, which is just putting more pressure on the UK economy. Now, the EU obviously presenting a very united front for Ukraine, but still, very nervous out there. And it's just going to be very interesting to see what does happen because, at present, it doesn't look like Putin really wants to have any sort of ceasefire or any sort of peace deal, despite what he says. Now, in Australia, consumer confidence has had a little bit of a boost after that recent rate cut. The cash rate now down to 3.6 and potentially more rate cuts in the pipeline over the next sort of 3 to 6 months. So that consumer confidence is now at a 3.5-year high. Now, here in New Zealand, as expected, the Reserve Bank did cut the OCR down to 3%. But what was more interesting was a split vote, a 4-2 vote. Two members actually wanted a bigger cut of 50 basis points. So now most analysts and economists are sort of the opinion that we will see a further cut in either October or November, taking the OCR down to 2.75 and potentially 2.5 by sort of March or April of next year. Now, it's obviously good news for homeowners out there and mortgage holders because, mortgage rates are starting to fall. And with a lot of mortgages due to be reset over the next 3 to 6 months, that's certainly going to put a fair bit of more disposable income into the economy. It's been, the sort of failure to front up to the COVID investigation and Royal Commission from Ardern, Robertson, Hipkins. Now, while obviously Ardern and Robertson are out of politics, it's not a particularly good look for Chris Hipkins, the current Labour leader. So if you're looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.